What's shaking, Kaleidoscope fam? Get ready to dive headfirst into the whirlwind of headlines because the news cycle never sleeps, and we're here to break it all down for you. The digital world is buzzing, and if you blink, you might miss something monumental. We've got a packed show today, featuring some absolutely wild developments that you won't want to miss. From unexpected digital disruptions to major market shifts, we're covering the stories that are making waves and shaping the conversation. Prepare for a high-octane update that keeps you in the know, ahead of the curve, and always plugged into the pulse of what's happening. Let's get into it. First up, a digital identity crisis hits the headlines as a major artist finds their online presence hijacked. We're talking about a sophisticated breach that's causing a stir and raising serious questions about security in the digital age. What happens when your carefully crafted online world is suddenly turned against you? We'll explore the fallout and the immediate aftermath of this unexpected cyber event. Then, we pivot to the volatile world of digital assets, where a highly anticipated launch takes a dramatic nosedive. Millions were on the line, and the market reacted with a swift and brutal correction. We'll unpack the numbers, the players involved, and what this massive swing means for the broader digital currency landscape. Following that, we revisit the digital security saga with even more astonishing details emerging. It seems the initial breach was just the tip of the iceberg, revealing a deeper story of digital manipulation and its far-reaching consequences. We'll get into the specifics of how this unfolded and what it means for digital safety moving forward. And finally, we're diving back into the digital currency crash with a stark look at the financial impact on everyday investors. The numbers are in, and they paint a grim picture for many who jumped into this trend. We'll break down who lost what and the broader implications for the speculative markets. Stick around because you need to know this. Make sure to like, subscribe, and hit that notification bell so you never miss an update. Digital identity under siege. An unexpected digital intrusion has sent shockwaves through the online community as a prominent artist's social media presence was compromised. This incident highlights the persistent vulnerabilities within digital platforms and the sophisticated tactics employed by malicious actors. The artist, known for their significant online following, recently launched a new digital currency. In a move that blindsided many, their official Instagram account was allegedly taken over by hackers. These perpetrators then used the compromised account to promote a fraudulent cryptocurrency, attempting to leverage the artist's established credibility for their own illicit gain. The fake coin was aggressively pushed through posts on the artist's account, creating immediate confusion and potential financial risk for unsuspecting followers. Adding to the complexity, the artists themselves took to a public platform to alert their millions of followers about the breach. They explicitly warned that their Instagram account was compromised and was being used to promote a fake coin, providing the legitimate contract address for the actual project. This public disclosure was crucial in mitigating further damage and guiding genuine supporters toward the authentic initiative. It's important to note this isn't the first time the artist has had a brush with the cryptocurrency world. In 2014, they famously sued creators of a similarly named coin, Kanye West. Earlier this year, the artist revealed they rejected a lucrative $2 million offer for a cryptocurrency promotion that involved a staged hacking scenario, demonstrating a clear stance against deceptive practices. Despite the initial chaos, the artist's Instagram account appears to have been secured, with the fraudulent posts removed and the offending accounts delisted. The incident serves as a stark reminder of the constant battle against cyber threats and the importance of robust security measures for high-profile digital identities. The swiftness of the hack and the subsequent promotion of a fake coin underscore the evolving nature of online scams, often exploiting the trust built between influencers and their audiences. Audience impact. Social media users and cryptocurrency enthusiasts are keenly observing these developments, with discussions centering on the need for enhanced platform security and greater diligence from creators and consumers alike. But the story doesn't end with a hacked account. We're about to see just how much this digital disruption impacted the market. Get ready for the full breakdown of the YZY token crash. Crypto collapse, millions vanish in YZY token meltdown. In a dramatic turn of events that has left thousands of investors reeling, Kanye West's highly anticipated YZY memecoin launch has imploded, resulting in staggering losses. The token, which initially promised astronomical returns, experienced a catastrophic crash, wiping out fortunes for the vast majority of its participants. Reports indicate that over 70,000 wallets eagerly jumped into the YZY token launch, drawn in by the celebrity endorsement and the promise of rapid gains. The token's price surged an astonishing 1,400% within its first hour of trading, creating a feeding frenzy among eager investors. However, this euphoria was short-lived. The token's value plummeted by over 80% shortly after, leaving most holders deep in the red. Blockchain analytics firm Bubble Maps revealed a grim reality. More than 51,800 wallets suffered financial losses. The situation is particularly stark for some individuals, with 3 traders alone losing upwards of $1 million each. In stark contrast, only a handful of wallets, specifically 11, managed to secure profits exceeding $1 million, highlighting a significant disparity in outcomes and suggesting potential insider advantages. The fallout from the YZY token launch has also drawn attention to other figures in the crypto space. Andrew Tate, known for his controversial commentary, reportedly attempted to profit by shorting YZY with 3x leverage, only to incur a substantial $700,000 loss. Furthermore, blockchain personality Hayden Davis faced accusations of being an early sniper, capitalizing on the launch to secure massive profits while retail traders were left holding devalued assets. Bubble Maps specifically flagged Davis for pocketing $12 million shortly after his involvement with the troubled Libra token project came to light. The narrative is further complicated by reports linking early buyers to well-known memecoin snipers like Nassim, who previously amassed considerable wealth trading other meme tokens, making it exceptionally difficult for ordinary investors to compete. This incident is not an isolated event. It mirrors a broader trend of celebrity-endorsed tokens failing to deliver sustainable value. Over 30 similar tokens launched on the Solana blockchain in June 2024, backed by various celebrities, with nearly all experiencing significant value depreciation, often exceeding 70% and in many cases over 90%. Despite temporary spikes in retail interest, these tokens historically lack the fundamental utility or long-term viability needed to maintain their value, often serving as fleeting speculative vehicles. Audience impact. Crypto investors are expressing widespread concern over the prevalence of rug pulls and manipulative practices in the memecoin market, calling for greater transparency and regulation. While the financial losses are devastating for many, the story of the YZY token is far from over. We're delving deeper into the exact scale of the financial devastation. Prepare for a detailed look at the investor losses in the YZY token crash. Digital identity under siege, the aftermath. YZY speaking out after his foray into the world of cryptocurrency was interrupted by hackers. The controversial artist recently launched his new Solana meme coin, YZY Money, and began to spread the word via the coin's new social handles. On Tuesday, August 26, he hopped on X to warn his 33.1 million followers that his Instagram account was infiltrated by hackers who promoted a fake coin called YZY token. He also provided the authentic Solana contract address. "My Instagram has been hacked, and it's following a fake coin," he wrote. The official project is at YZYMNY. Dr. Z26CKJ DKS VR WIB 3D WSJ09 EXCCC 7HKHD Java YZY. This is the first time the artist formerly known as Kanye West has launched a cryptocurrency project under his name and likeness. He initially scoffed at the idea and even sued the creators known as Kanye West in 2014. Earlier this year, he told fans that he passed on a $2 million offer to be a part of a faux cryptocurrency promotion that called for him to post about it to his millions of followers, then claim his account was hacked hours later. "I was proposed $2 million to scam my community," he said in a now-deleted X post. "Those left of it. I said no and stopped working with their person who proposed it. Following the success of previous imposter coins, YZY's actual coin debuted at a nearly $3 billion fully diluted value, FDV, per Decrypt. However, it recently dipped 81%, with some traders losing over $1 million. YZY's Instagram appears to be back in his control now. The fake meme coins account has disappeared from his follower list, and the faux posts have been removed. Audience impact. Fans and observers are discussing the ongoing battle between artists and cyber threats, emphasizing the need for enhanced digital security protocols for public figures. While the artist has regained control of his account, the ripple effects of this digital incident are still being felt in the financial markets. Let's now turn our attention to the staggering financial losses incurred by investors in the YZY token. Investor devastation. 74% lose big on YZY token. Data from blockchain analytics platform Bubble Maps reveals a stark reality for investors in Kanye West's YZY memecoin. A staggering 73.8% of traders have suffered financial losses, amounting to approximately $74.8 million. Out of the 70,201 traders who participated, a significant portion, 51,862 wallets, found themselves on the losing end. The severity of these losses is underscored by the fact that 1,025 of these wallets experienced deficits of $10,000 or more, indicating substantial financial setbacks for a considerable number of investors. In stark contrast to the widespread losses, a smaller segment of participants managed to profit from the volatile token. Bubble Maps reports that 18,333 wallets collectively gained over $66.6 million. However, even within this group, the majority of profits were modest, with 15,792 addresses, representing 86% of the profitable wallets, earning less than $1,000. This distribution of profits further emphasizes the uneven playing field, with nearly 30% of the total profits concentrated in just 11 wallet addresses. This concentration of wealth suggests a potential for insider trading or sophisticated market manipulation. The YZY token was marketed with the ambitious promise of giving users complete control over their finances without centralized government intervention. However, mere hours after its launch, the token's value plummeted by nearly 70%, a rapid decline that has led many in the crypto community to suspect market rigging. Specifically, allegations of insider trading and snapping, where automated bots acquire a substantial portion of a token's initial supply immediately upon launch, are circulating. These practices would effectively create artificial scarcity and price inflation, allowing early participants to exit with significant profits while leaving later investors with devalued assets. Further fueling these suspicions is the identity of some early investors. It's been claimed that the first investor in YZY was an anonymous trader known as Nassim, a seasoned sniper who previously generated around $100 million from the meme coin associated with U.S. President Donald Trump. Additionally, Hayden Davis, an individual with a contentious reputation in the crypto community, notably linked to the failed Libra project, reportedly made $12 million through snapping YZY. The involvement of such high-profile, and in some cases controversial, figures points to a market susceptible to exploitation by experienced traders who can leverage information and technology to their advantage. Audience impact. The crypto community is increasingly vocal about the need for fair market practices and is demanding greater accountability from token creators and major influencers to prevent such widespread investor losses. It's clear that the YZY token launch was a financial minefield for most. But what's the ultimate takeaway from this volatile crypto saga? Prepare for a rapid-fire recap of today's biggest stories and a full call to action. And that's a wrap on today's explosive updates. We saw a digital identity crisis unfold with a hacked account, a crypto coin launch that went from hero to zero, more details emerging on the breach, and a brutal financial reality for most YZY token investors. Don't miss out on any of the action. Make sure you're subscribed, hit that notification bell, leave a comment with your thoughts, and follow us on all our socials for even more. We'll see you next time on the Caniscope.